This is the Asia Trade. I'm Shery in Tokyo.
I'm Haidi, Stroud-Watts in Sydney, where the market has just opened. The top stories this hour. Asian stocks are set for a cautiously positive open. Traders bracing for a US inflation report that could confirm fears of the Fed holding interest rates for most, if not all, of this year. We'll be getting the outlook when it comes to rates and the dollar from Goldman Sachs chief US strategist David Kostin, who'll be joining us exclusively from their global macro conference in Hong Kong. Plus, South Korean police reportedly entering President Yoon's residence after a pre-dawn raid in a fresh attempt to arrest him over last month's martial law declaration. We do have just some data crossing the Bloomberg when it comes to the South Korean labour market and the state of that unemployment market at the moment. The December adjusted jobless rate rising to 3.7%. The estimate was for 2.9%, so really a significant overshoot when it comes to the adjusted jobless rate for the month of December. That is the highest since June 2021. This is according to Statistics Korea. The estimate range for economists, of 13 economists, I should say, was between 2.7 to 3%, and that's coming at 3.7%. The November jobless rate, 2.7%. We saw a removal of 52,000 jobs from the South Korean economy from a year earlier. And when it comes to the population growth over 15 years old, we saw an increase of 0.3% compared to earlier as well. So all of this adding into expectations of more BOK easing. The Bank of Korea expected to cut the interest rate to 2.75% to continue trying to support the economy. It is, of course, facing this sluggish labour market, but also the ongoing political turmoil, of which we'll get the latest in just a few moments. That terrible Jeju air crash there as well. So 18 out of 22 economists at this point, Shery, predicting a cut from the BOK on these ongoing and really consolidating concerns for South Korea's economy.
Yeah, no wonder we have seen that pressure for the Korean won in recent weeks. We'll continue to watch that pressure as we're seeing other currencies across Asia also being pressured for a stronger U.S. dollar. Right now, we have seen the PBOC again reiterate that they will try to stabilize markets, that they will try to stabilize the yuan. You have it at 734 right now. We saw a little bit of support for the Japanese yen as well after comments from the BOJ Deputy Governor ahead of the BOJ policy meeting. Next week, we'll discuss that in a little bit. But Nikkei futures at the moment gaining a 10th of 1% after 4 sessions of losses already. Not a lot happening in the ASX 200, of course, that staggered open. But take a look at how U.S. futures are trading right now. We saw the downside pressure in the overnight session, especially when it came to tech. We're now hearing that Meta will be laying off about 5% of their workforce. We'll get more details on that. But in the meantime, we continue to watch that Treasury route, that despite the fact that we got wholesale inflation coming in a bit more benign, we actually saw yields rising and Treasury is just reversing earlier gains. The 30-year yield, again, surpassing that critical level of 5%, Heidi.
Let's get some more when it comes to these inflation expectations. And our Bloomberg Opinion columnist John Author says US inflation has the potential to derail a second Trump presidency before it begins. He joins us now for more. And John, it seems like we are hearing kind of more flutters of concern, right? We had the reporting yesterday that there's sort of plans being circulated proposing potentially a more staggered approach to trade tariffs, because clearly that is one of the biggest implications for a spike in inflation. But how much do you worry about kind of the self-fulfilling inflationary mindset taking hold?
Well, that's evidently one of the things that was going to most concern central bankers at present. Inflation expectations can be very dangerous if you're trying to, that's part of how monetary policy is supposed to work, by bringing down inflation expectations. And you do have a very complicated situation at the moment where consumer inflation expectations are generally rising. Not to alarming levels, but the general idea was that they would still be falling at this point. The change in direction is significant and alarming. Similarly, you've got break-evens from the bond market are rising fairly significantly. Again, they haven't broken out of their range of the last couple of years, but they're right at the top of it. A positive surprise, a higher inflation number than expected tomorrow really would put the cat among the pigeons in that respect. And then the other big problem you have, which is actually almost the reverse of this, is that we have this very polarized environment politically here in the States. And if you look at the latest University of Michigan numbers, where they divide the consumers they interview according to party identification, then apparently Republicans think that inflation in a year's time is going to be 0.1%, which would be astonishing if it happened, particularly if the administration goes through with imposing tariffs, which in the first year are absolutely without question inflationary. So there is both a risk that overall inflation expectations are rising, but also that expectations in their political base are unfulfillable, and that will increase political risks going down the line. When you can't keep your voters happy, politicians will start to do things that you might not want them to do, or that are harder to predict.
Yeah, you mentioned the Trump 2.0 could reconcile other problems as well, that they will face unleashed animal spirits that in other times would not be such a negative thing. But at the same time, you continue to hear talks about more tariffs, even Trump mentioning an external revenue service to collect tariffs at this point.
Yeah. Yes. I mean, I think you can say that one of the great hopes for those who don't completely buy Margonomics or Trump 2.0 or whatever you want to call it is that there are plenty of guardrails out there, and perhaps the most important is the market. It's obvious from the various very interesting stories that our own reporters at Bloomberg and others are getting from people in the Trump team is that, yes, his team is very much alive to those risks and trying to deal with them. That is plainly very encouraging. They are unlikely to do anything truly stupid, truly dangerous. That said, if we get a big surprise, a rise in inflation tomorrow, that reduces their room for maneuver and increases the risk of mistakes.
Our Bloomberg Opinion columnist John Authors there. We do have some breaking news just crossing the Bloomberg when it comes to Elon Musk. Obviously, as we know, a person very close to President-elect Trump. The SEC is suing Elon Musk over a securities violation in federal court. The full SEC complaint against Elon Musk is not immediately available, but we do know that the case has been filed in DC federal court according to that filing. So we'll strive to get more details as they become available. We do know that there's sort of a number of ongoing tussles that we've seen between Elon Musk and the SEC. He had earlier posted in December a letter on X stating that the SEC is investigating his company Neuralink and preparing to take action against him relating to his Twitter investment. In that case, the SEC was looking at the timing and this disclosure, I should say, of Musk's Twitter stock purchase before the acquisition in 2022 and gave him a deadline to look at either a settlement or enforcement action. So we don't know if this is the same sort of issue or a different case, but we are seeing that that has been filed by the SEC over a securities violation. That lawsuit, the complaint, has been filed in DC federal court. We'll bring you more as we get more details, but Tesla at the moment still pretty flat in the after-hours session. Shery.
And Haidi, let's go live to Seoul, where we continue to see this dramatic standoff between the police and also President Yoon Suk-yeol's team. South Korean investigators have launched a dramatic new bid to arrest the impeached president following a failed attempt earlier this month. Yonhap News is reporting the police and investigators have entered the residence of Yoon Suk-yeol using a ladder and gotten past two lines of security. You can see the live pictures right there of South Koreans camped on the streets. Bloomberg's Dennis Thomas joins us now live from Seoul with the latest. We continue to see these protests, I think, from both sides, protesters for impeachment and against impeachment and removal of the president. What does this mean? Where are we at right now?
Hi, good morning. So yes, it's a second attempt, as you mentioned, and by what we are seeing from the live images, there is the investigators are making steady progress. As you remember, the last time they couldn't continue to execute their warrant, so this time they come better prepared, and there is a bigger police presence to make sure that this goes smoothly. The acting president has made it very clear that he doesn't want to see any physical clashes. So the investigators this time are determined and they have a better strategy, hopefully, to make sure that they take Yoon into custody eventually. And it will be pretty unprecedented for a sitting president to be taken into, to be detained. And so South Korea is definitely going through one of this worst political crisis. What it means, I think the Constitutional Court has already started an investigation or a trial into the impeachment attempt that Yoon made, and what this probe is trying to make is that Yoon is also questioned for his role in what he attempted to do on December 3rd. So that's where we are in terms of the protesters. There's a bigger presence today of Yoon protesters on the ground. Local media saying there's around 6,500 of Yoon protesters and a fewer numbers in people who want him arrested. So that's where we are, and we'll get to know more in the coming hours in terms of where things go.
And at the same time, we see the worsening picture when it comes to the economy, right? That adjusted jobless rate rising to the highest since 2021. We know that the Bank of Korea is now under even more pressure to cut, despite the pressure that we see on the Korean won as well. How much is sort of the deterioration in the economic outlook also playing into this, given that we're also dealing with the aftermath of the aviation disaster and just this really long, strung-out political turmoil?
Yeah, so tomorrow's Bank of Korea meeting is going to be pretty crucial, and we already have two back-to-back cuts in November and October. And if they go and cut tomorrow, it's going to be one of the, again, setting some kind of record in terms of how policy has moved swiftly. But it's a kind of a very close call. The Bank of Korea wants to wait and see how the past two rate cuts have played into the economy. Equally, the government has cut the growth forecast. So there are various factors at play here, and it's going to be a very close call tomorrow. There is a view out there which says that if you go and announce a third cut tomorrow, it's going to be sending a bit more of a pessimistic mood out there and sending a bit of a warning bell from the central bank. So how the bank plays it out tomorrow is going to be, it's a wait and see, but it's very close call, and people are closely following how this tomorrow's meeting goes and what comments we'll hear from the governor tomorrow.
Bloomberg News editor Danny Thomas there from Seoul as we continue to watch that developing political situation very closely today. But coming up on the Asia Trade, in the meantime, we'll be unpacking the risks still facing China's property developers with Jefferies. Goldman Sachs' chief US strategist David Kostin will be along with us live from their global macro conference in Hong Kong. We're talking about this global bond market as well with Brandywine Global. They think that Treasury yields could take a breather as the Trump administration prepares to take office. But first, hot, dry winds fanning the Southern California wildfires. Around 2 million people are now warned to brace for more extreme conditions for at least the next 24 hours. We'll get you the latest live from Altadena next. This is Bloomberg.
Hot, dry winds are raising wildfire risks in Los Angeles and surrounding areas of Southern California, with authorities warning millions of residents of a dangerous day ahead. Let's bring in ABC reporter Melissa Adan in Altadena. Melissa, so how bad is the situation on the ground today?
Absolutely, Shery. So it is something that has been so hard for so many families to deal with. On one end, you have thousands and thousands of homes like this, just property leveled. So many homeowners without nothing left. It goes on for miles. And this is just one wildfire here at the Eaton Fire in Altadena, California. Then you have towards our coast several thousand other homes that are gone. Right now here in this area, we're hearing activity because there are some signs of trying to rebuild already. The electricity crews are coming, trying to repair nearby things. We've seen bulldozers trying to clear out so much debris because it is going to take so long to rebuild. However, all of this amid these really dry conditions that we've been experiencing. Some parts of Southern California already clocking in 45 to 70 mile per hour winds again today. It is unsettling. People are nervous, and they're definitely anticipating any evacuation warnings if another wildfire were to break out.
Tell us more about these evacuation orders. What sort of assistance is available to residents? Where are they being told to go, and how difficult or how easy is it to be able to get these people out?
Absolutely, Shery. So that is kind of how all of Los Angeles County and the greater Southern California area has been. We've been on alert, just waiting to see if you get an alert on your cell phone, if you see the news report coming in, if a wildfire is to break out and your area is even under an evacuation warning. Officials are saying get out, have that evacuation plan in place. Make sure that you have a go bag ready to go. Then make sure your route is in place. There are evacuation centers that have opened up across Southern California. But at this point, they're full. Some of them are full to capacity, as now folks from these victims of these wildfires are looking for their temporary housing. So it is definitely an evolving situation, but also some welcome sight. FEMA is on the ground. That is our federal assistance across the United States. They are now set up at 2 locations across Los Angeles County to provide that really key resource, making sure people get funding, get their loans so they can get to temporary housing, so they can file for their insurance claims, so they can get one-time donations, so some money to make sure they have food, water, clothes, making sure they can, if their IDs burn down, their important paperwork. There is just so much to look at for these families. And then again, with that current threat and red flag warnings that we're all under, that people are really stressed and waiting and anticipating any further updates. Shery?
Melissa, there's been a lot of finger pointing politically, of course, as I can imagine, when it comes to the level of preparedness for Los Angeles in the wake of these fires, right? If you take a look at data, it seems like the area is actually really underfunded for firefighting capacity compared to perhaps other major US cities that face less fire risk. So is there a conversation about how better prepared LA could be going forward, and how that feeds into, you know, whether and where these houses and infrastructure might be rebuilt, particularly in light of an expected ongoing fire season that might get worse with climate change?
Absolutely. You know, so first and foremost, people are sad, they're frustrated, and they're angry, and they have a right to be angry, right? So everyone where you live in different municipalities, if you're either responding to city leaders, to county leaders, to state leaders, they want accountability. They want there to be plans. You know, Governor Newsom actually released an additional $1 billion of funding, some of that for wildfire preparedness. There has been that criticism towards the Palisades fire, towards the City of Los Angeles Fire Department, making sure what is their better plans moving forward if air support is not possible because windstorms may come back in such a great force. What is their plan for more effective water on the ground, right? These are things and questions that people have, as well as the origin of the fires when it comes to that. But more than anything, so many people just want to make sure that they feel safe. Today and yesterday, LA County and LA officials stressed that they are prepared. They have gotten resources from other states, from other countries even, but the pressure is on and the attention is on them to make sure that residents feel safe during these really scary times.
ABC News reporter Melissa Adan there in Altadena, California. Appreciate your time as we continue to watch these developments in LA, these wind conditions continuing to fan further fire risk. More ahead here on the Asia Trade. This is Bloomberg.
This is the Asia trade. Some of the top stories out of Wall Street. Bloomberg's being told a top BlackRock executive, once seen as a potential successor to CEO Larry Fink, is leaving the firm. Mark Wheatman is head of global client business and a 20-year veteran with the world's largest asset manager. We're told he's leaving to pursue other opportunities, with BlackRock set to elevate multiple executives as soon as this week in a leadership shuffle. JP Morgan has named Jen Piepszak its new chief operating officer, taking over from Daniel Pinto, who will retire next year. It's the second time in a year the biggest U.S. bank has shuffled its top management. Piepszak's spokesperson says she has no eyes on the CEO job for now, saying her preference is a senior operating role supporting top leadership. And staying on banks, Wall Street's biggest lender is expected to report a 15% increase in trading revenue in the fourth quarter of 2024. For more, let's bring in Sally Bakewell, who leads the U.S. finance coverage. And of course, banks kicking off the earnings season. Sally, what numbers will you be watching?
Yes, well, trading will be one of them, because as much as the US election created a lot of anxiety and uncertainty over here, it also delivered the bank's traders a likely windfall. And some of the biggest banks on Wall Street, they're expected to post their highest fourth quarter on record. And indeed, a lot of the banks had already telegraphed this. Bank of America CEO Brian Moynihan, he said that their sales and trading team had their best quarter on record. And Citi CFO Mark Mason, he also said last month that they expect markets revenue to be up in the high teens. So I think trading should be a very strong quarter. And of course, investment banking will be another one we'll be watching, because the much anticipated deal resurgence has started to come through, and the outlook for deals will also be very closely watched, because a Trump presidency is expected to dial back a lot of the regulation that had been seen as shackles on big jumbo M&A deals.
What are we looking for in terms of the outlook, right? How much of a degree of uncertainty in there that's going to be sort of playing out with the uncertainty in the rates outlook, what the Fed does, the inflation outlook, and broader kind of growth and confidence?
Right. So everything basically is fairly uncertain. I think with bank earnings, almost as important as the results themselves is the commentary that the CEOs give. So we'll be looking for their comments on what they expect under a Trump presidency. And indeed, do they expect this big M&A boom, or are they concerned about tariffs and the subsequent potential for inflation? Regulation will be another big one. Any expectations for what actually happens with Basel III, which are the regulations that would increase the amount of capital banks have to hold, which are widely expected to be pared back a lot. Any commentary about their expectations for that will be particularly noteworthy. We'll also be watching for things like credit quality. Banks have touted consumer health pretty strongly over past quarters, but we have had news out of the US, particularly concerning Ally Financial, which indicates that that might not be the case. So we'll be looking also for the health of the consumer.
Sally Bakewell, who leads our US finance coverage there, with a look ahead to those big bank numbers. And of course, that's top of mind for investors more broadly as we take a look at how US futures are tracking at the moment. We have an Asian session that's kind of setting up with a fair degree of trepidation ahead of course, US CPI numbers, which could kind of consolidate the interpretation of the Fed's rate path over the coming months. We are seeing a bit of upside there when it comes to S&P futures, a little bit more for the Nasdaq and Dow there. More ahead on the Asia trade. This is Bloomberg.
Take a look at how we're setting up across Asia. Early in the trading session, we have the ASX 200 being led higher by real estate and financials right now, as Nikkei futures are pointing to the upside after 4 sessions of losses already. Of course, we're headed towards another BOJ meeting next week. Already, we heard from the BOJ deputy governor signaling an interest rate hike may happen next week. U.S. futures not doing much, but we continue to watch the strength of the dollar. Of course, the PBOC continues to reiterate its goal to keep the yuan stable, that it will use monetary tools to maintain liquidity and support the currency at that 734 level. Haidi.
Well, distressed Chinese developer Shery Country Garden suffering another record loss in 2023. It's blaming the result on impairment provisions, declining gross margins and price cuts. Country Garden says it still has more than 3,000 projects to sell, with inventory worth more than $82 billion as of mid-2024. The delayed earnings report comes as it continues a lengthy restructuring process after defaulting in late 2023. This also comes at a time where we're seeing really a number of distressed Chinese companies, many of them real estate related, facing a flurry of court hearings at the start of 2025, including the likes of Evergrande Group, one of their units, as well as Shery as well. Let's bring in Shujin Chen, who's a head of China Financial and Property Research at Jefferies. And it's a new year, but certainly the same old problems for the Chinese property sector. Do you see any meaningful change as long as the government refrains from really addressing the supply side of the issue?
Good question. So first is that we have already seen that government tried quite a lot. So first is that for the housing delivery remains the top priority for the local government, and now we see that the white list really helps quite a lot in the past 2 years. And the second is that we see more funds allocated to help with the land and property inventory purchase from developers. However, from our perspective is that we think it's still not enough, because when the government purchased those land and also especially the inventory, they were still turn them into the social housing. For example, like tenant apartments. And for these social housing, it was still it has a relatively lower rent comparing to the market price. For example, the tenant apartment, their rent can be like 30% lower than the market price, and the other kind of social housing can be even lower. So like more social housing will also result in the pressure to the rent, and therefore the pressure to the price. So unless the government spend quite a significant amount of money, for example, more than RMB 2 trillion per year, otherwise the purchase may not significantly help the property market price.
Do you think there's much more in the toolkit for the government, and when could we see prices actually bottoming out, or have they?
Sure. So first is that we see the monetary policy still helps because, well, from our perspective, is that the market price may still decline unless the rental yield can be as high as the mortgage rate. So currently we see the mortgage rate is around 3.0% for new home buyers, while the rental yield is only around like 2.3% on average for top 100 cities. So like cutting rates and especially like mortgage rate, it can help with those. It will make the home buy. Will make people to like purchase rather than rent, so it definitely can help and reduce the potential room for the property for the property price. But the second is that I actually think that, especially after our field trip in the past year, we found it's not only a property market problem, but it's more about like expectation for the income. For example, last year in the first quarter when we did those field trip in across the provinces, like quite a lot of industry experts said that like more loosening policies or more supportive policies to the property market can actually help to bottom the price and maybe help to see the recovery for the market. But in the second half of last year, we found the same experts and same people, they now see the problem more about the expectation for the income, especially for higher income class people, because they are the major buyers, home buyers in China. And since currently, for example, in financial industry, property or internet, we still see like pay cuts or like freezing hiring in those industries. So it may take a relatively longer term. Yeah.
So we have about 8 major Chinese firms, including Evergrande, facing court hearings in the next 2 weeks. Given what you've seen on the ground, does that mean that we're expecting things to become worse for Chinese developers in 2025?
Good question. When we are talking about whether the worst has already passed, largely depends on which indicator we look at. For example, when we are talking about like more developers to default for their first time, in 2022, around like 32 developers defaulted for the first time. Last year, in 2023, it was around like 15, and last year it was only 5. So this year we still expect a few to come, given the given the tightening liquidity across the different developers, especially in some regional SOE developers. But the overall, like new developers to default for first time can be definitely lower than in 2022 and 2023. So from this perspective, we can say that worst is over.
Okay, and yet we are expecting perhaps at least some defaults, second restructurings as well, right? So what would that mean for investors and just the broader property market?
So still, we expect some impact, at least to the sentiment, to the property market. But on the other hand, is that we notice the interest for the equity investors in the property sector is relatively low. Now, almost all investors, major investors, only focus on a few central SOE developers and very few like regional players who has relatively good fundamentals. So for most investors, we don't see too much impact, especially for those developers who are, from the some news regarding to like liquidation or like new defaults.
Shujin Chen, head of China Financial and Property Research at Jefferies. Great to have you with us. We take you live now to South Korea because we continue to get the latest developments on that standoff between South Korean police and President Yoon Suk-yeol. Right now, we're hearing from local media, E-Daily, saying that the Yoon's lawyer is now saying that the president has, in fact, been arrested. Remember, this was a second standoff after an attempt earlier this month to take President Yoon Suk-yeol in. The South Korean investigators had arrived at Yoon's residence trying to arrest him over his martial law declaration. You can see those pictures outside at his residential compound in Hannam-dong. And it seems that local media E-Daily has spoken to Yoon's lawyer now saying that the president has, in fact, been arrested. Now, the acting security chief has also been arrested. That's according to Yonhap TV. YTN now saying that President Yoon could be coming outside of the residence soon as well. The lawyer now saying that Yoon is in talks with investigators to make an appearance. We'll continue to watch the latest developments, but if President Yoon Suk-yeol has in fact been arrested, this would be the first incumbent head of state in South Korea's history to be taken into custody. We know that the Constitutional Court has already begun the trial to decide if President Yoon will be permanently removed from office after his martial law declaration, but President Yoon refused to appear in public given the concerns that he might be arrested because of a separate criminal probe. So we have continued to see this standoff outside of his residential compound in Hannam-dong in Seoul. Those are the live pictures that you're looking at right now. We'll get you the latest details when we can. More ahead on the Asia trade. This is Bloomberg. Toyota's focus on hybrids and gas guzzlers has made the Japanese company the world's #1 automaker, but the success also raises the risk of Toyota being left behind as EVs become more popular with customers. Bloomberg senior editor Reed Stevenson joins us now. Reed, a great story right now on the big take, but tell us a little bit about how Toyota is faring in this space.
Well, I mean, when you look at the overall business, I mean, they're doing great. They sell the most number of cars of any automobile manufacturer in the world, more than 11 million last year. And their strategy of focusing on hybrids as well has really paid off. There's demand for those as demand for EVs just doesn't realize as fast as anticipated. But what the story is here is that, it's about the future. It's going to happen, what's going to happen 10, 20 years down the road. And in that respect, Toyota still has its challenges. The BZ4X, its first global mass market EV, had some issues at the get-go. And then what we did was we went to a facility where we looked at some of the components that really kind of showed areas where it could learn from the likes of BYD and Tesla.
So how is Toyota really competing with these Chinese EV makers, not to mention Tesla as well?
Yeah, so when you look at different markets around the world, China, for example, Toyota, as well as other Japanese car makers and the Europeans and Americans, they're all getting clobbered. And then in Southeast Asia, there are areas where their dominance really has started to be chipped away. So it really depends on the market you're looking at. But obviously, when you look at a market like China, where BYD and others are really introducing EVs at a very quick clip, taking market share, that's the blueprint for the future in more mature markets. And so there is going to be a lot to learn in terms of the pace of innovation and also just, component design and improving on existing processes.
It's interesting, and I wonder if you can talk a little bit about the sort of culture of leadership, right? Because there's this one great quote in the story that says there's such a deep bench of technology and engineering, obviously being global leaders for so long, but are they necessarily good at kind of rethinking from the beginning to overcome some of these very new challenges?
When you look at the history of Japanese enterprise, the emergence of the Japanese auto industry was one of learning, right? They took the best of manufacturing from overseas and then actually perfected on that. And you've seen that in the electronics industry, you see that in raw materials, in chips, etc. What we're just seeing in the auto industry, to a certain extent, if you want to sort of zoom away from the issue, is another phase where there is an opportunity to learn from abroad and take the best and perfect on it, because there is the benchmark of talent here in the country.
Bloomberg senior editor Reed Stevenson here with the latest on the EV space and Toyota. Of course, you can read the full story on the terminal for terminal subscribers. It will also publish later on Bloomberg.com. But we take you back to what's happening in South Korea right now, because the standoff continues at the residential property in Hannam-dong in Seoul as police are now trying to arrest President Yoon Suk-yeol. What we're hearing from local media is that, in fact, the president has been arrested. Now, Yoon's representative Seok Dong-yeon saying on his Facebook page that the lawyers are in talks for voluntary appearance for questioning. They're saying that the Corruption Investigation Office for high-ranking officials and Yoon's personal lawyers are now discussing Yoon's voluntary appearance before investigators for questioning. Remember, the Constitutional Court has already begun trial on whether to uphold his impeachment decision from Parliament. We'll get you the latest as we get them. We're hearing from local media that perhaps the president could even make an appearance outside the presidential office. We'll continue to watch the developments. This is Bloomberg.
Well, Meta announced that it would cut roughly 5% of its staff through performance-based terminations. That could impact roughly 3,600 jobs across the world. But the company also plans to hire new people to replace them. Let's get over to our tech reporter in San Francisco, Riley Griffin, for the details. And Riley, what do we know in terms of the broader strategy from this memo?
Yeah, according to a note that Mark Zuckerberg sent to staff earlier today, we know that he is seeking to cut 5% of staff that he deems to be low performers and then replace them with new talent. This comes after last year, in which the company also saw 5% attrition. So they're going to see about 10% reduction in headcount through about February, mid-February, at the end of the performance cycle. And that's going to open up space, in Zuckerberg's words, for that new talent so that they can compete in a year in which he's focused on AI, the future of social media, and their hardware, their glasses.
It's been a pretty challenging week for Meta last week as well. Board member changes, not to mention, of course, Trump's influence there. Tell us a little bit about what's happening with the company.
Yeah, it's been a very big and chaotic moment for Meta this year. Zuckerberg is clearly trying to demonstrate a new leaf with the Trump administration. He tapped the new board member, Dana White, the UFC chief, who is a Trump ally. He threw into the mix a new head of global policy, who is a Republican strategist. And he ended US-based fact-checking work, which has been in place for years. And to top it all off, changed the hateful conduct policies to make more leniency around the speech that is used online directed at trans and non-binary folks, women, people of color, and immigrants. So it was a busy week last week. Zuckerberg capped it off by visiting Mar-a-Lago. He intends to go to the inauguration next week as well. So we're watching closely as Meta demonstrates a new kind of path forward with the Trump administration.
And part of that is this kind of realliance, or perhaps a more obvious alliance, right? That's quite clear. I do wonder, given the trend that we've seen from, the Twitter users or X users moving to Blue Sky, for example, now we're seeing this sort of phenomenon of TikTok users moving to China's Xiaohongshu. What is the risk for Meta platform users here? Do we expect to see more of a backlash?
The risk from the TikTok news? Specifically, or around the
risk, the risk of the sort of change in fact-checking policy, and perhaps some of the unhappiness for Facebook and Instagram users on that. Yeah, already we're seeing certainly some users who are disappointed, alienated, clients of Meta's that are distancing themselves from Zuckerberg and these moves. On the flip side of that, you're going to see some that are drawn closer. But that long-term tail-end effect of what kind of content is appearing on social platforms, what dis and misinformation is being spread, that's still to be seen. The fact-checking operation is one that was unbiased and not politically motivated, according to fact checkers themselves, who have put together an open letter, calling for additional fact checking, given their fears about what could come on these platforms. But it remains to be seen. We've certainly seen the effect on X, the spread of misinformation. And so as Zuckerberg seeks to bring these community notes onto his own platform, we'll see if that effect translates into the Meta universe.
Our tech reporter in San Francisco, Riley Griffin there. Now, the SEC is suing Elon Musk in federal court over an alleged securities violation. The agency claimed Musk failed to timely disclose a major purchase of Twitter. Meanwhile, Bloomberg sources now saying the Chinese officials are evaluating Musk acquiring TikTok's U.S. operations if it fails to fend off a ban due to take effect this weekend. Bloomberg Opinion columnist Catherine Thorbeck thinks even a Musk takeover won't save the app in the U.S. She joins us now. TikTok is really running out of options at this point, but why don't you think this could work?
So I think it's interesting. I don't think that an Elon Musk TikTok takeover is necessarily as crazy as it sounds. He has been saying for a number of years now that he wants to start this everything app, and incorporating TikTok into X would sort of fit into that. That said, I think if you look at what he's done with X, formerly Twitter, since its takeover, for a lot of users, they've decamped to other platforms, whether that's Meta's Threads or Blue Sky, and I think a lot of them feel like sort of the vibe has shifted, and once Elon Musk took over, and sort of his sway over the content now on that platform has really changed a lot of what made it useful before, especially for breaking news events, and when you want to get real-time information, now you're sort of flooded with sort of Elon Musk's tweets at the top of your feed.
And the point about the TikTok ban was over security concerns, right? And an Elon Musk takeover, would that help at all?
So I think that would assuage Washington's fears about Beijing's, security threats and the potential influence that Beijing could have over content. But I think it also sort of shows this trade-off, which is that, as a result, Musk, the world's wealthiest man, will have sort of a huge influence over people's social media platforms. And I think a lot of the reaction on TikTok has been, we don't necessarily want Musk to come in and save us. If this goes the same way that X goes, this isn't, it loses a lot of what made the platform special.
Catherine, I have to say the irony of, the security concerns, the sort of foreign influence concerns over TikTok, and then you have this, swath of users heading over to Xiaohongshu, which is not something that I think I would have predicted even last year. Do we see this kind of phenomenon as continuing to play out?
So I think what a lot of TikTok users are doing with this very public sort of protest of going to Xiaohongshu is actually sort of poking fun or sort of showing the government that, this whack-a-mole approach to just singling apps one at a time based on, where their parent company is based or where their headquarters is based may not protect users the way they want to from, these data collection concerns and these fears of, influence campaigns.
Bloomberg Opinion columnist Catherine Thorbeck here with the latest on TikTok. And we take you live again to South Korea because we continue to see that standoff in the residential compound in Hannam-dong in Seoul with police trying to arrest impeached President Yoon Suk-yeol. At this point, there's conflicting information with local media now saying that Yoon's lawyer has told them that the president has been arrested, but at the same time, we're getting Yoon's representative, Seok Dong-hyun, coming out on his Facebook saying that President Yoon has not been arrested, that the lawyers are currently in talks for a voluntary appearance for questioning. Of course, this has been a key issue for the president. We have the Constitutional Court already starting trial to decide whether the president will permanently be removed from office over his martial law declaration. But at the same time, Yoon's lawyers did not want to have Yoon appear in court, saying that it was a safety concern, that they might try to arrest him in a separate criminal probe while he was on his way to the court. So there's been a lot of wrangling around that. This is the second attempt to try to arrest the president from earlier this month after a nearly 6-hour standoff at the residential compound, given resistance from Yoon's security team. But at the moment, we continue to watch as we're seeing protesters for and against the impeachment of the president outside his residential compound. We have the market opens in Seoul and Tokyo next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens as we're watching the bond markets, Haidi, because we continue to see that Treasury rout continue despite the fact that we got some benign wholesale inflation numbers. US CPI, of course, is key now.
Yeah, really key to kind of whether this feeds into a little bit of a confidence spiral at this point in terms of expectations of further inflation coming through from the Trump administration's potential policies, how that feeds through to even a kind of further diminishing of Fed easing expectations. But of course, in sort of closer to our part of the world, we are watching the ongoing political saga Shery, in Korea.
Yeah, and of course, that will have implications for the Bank of Korea decision tomorrow. The expectation is for a cut. We're also watching the Bank of Japan's rate decision next week as well. So a lot of central bank policy making here across Asia. Take a look at how Japan is opening right now, downside of more than 1.5% after already 4 sessions of losses for Japanese stocks. Take a look at the open right now. It's actually a rebound after 4 sessions of losses, and we're seeing gains of 0.6%, while the Japanese yen is holding at that 158 level. What we've been watching very closely is JGB yields because they really rose across the curve. We're talking about the 40-year yield rising to the highest level on record since 2007, not to mention the 10-year yield is also gaining ground given the global bond rout. But it's really about what's happening in the currency space, especially after we heard from the BOJ Deputy Governor Ryoso Himino talking about the possibility of a rate hike next week. Take a listen.
The board will carefully study the economic data we have so far and consider the overall economic picture. Then we will have a discussion and make an appropriate decision.
And of course, before that decision, we have the Bank of Korea rate decision on Thursday. The expectation is for a rate cut, and that is really not surprising given the economic challenges that the economy faces. We already had the jobless rate now rising to the highest level since 2021. Not to mention the ongoing political saga. We will continue to watch the standoff right now at the residential compound of impeached President Yoon against the police. The police are trying to arrest him. The Constitutional Court now trying to decide whether his impeachment is permanent. The Kosdaq gaining ground about 0.5%, and the Kospi up 0.7%, while the Korean won is holding steady. Heidi.
Yeah, let's take a look at how we're tracking just an hour into the trade here in Australia. This is the picture when it comes to the ASX. We're up by just about 0.3% there, as we see kind of muted gains continuing from the previous session there. The Aussie dollar, 61.90. We're really kind of seeing the reverberation of this dollar strength story continuing. We did have a view from Citi when it comes to the earnings outlook for Australia, expecting the ASX 200 to post pretty tepid earnings growth in the full year 2025. Particularly with being weighed down by weakness in mining profits in particular. And of course, we are watching treasuries very closely given these expectations that the US CPI number could really just compound some of these Fed concerns. And on that, let's bring Garfield Reynolds, who leads our Markets Lab Asia coverage. And does it sort of, the expectation is that it will feed into the narrative of diminishing need for the Fed to do anything?
Yeah, it would need to come in shockingly soft, both on headline and core, and some of the underlyings. One of the interesting things with what went on overnight with PPI, which came out first, that came out slightly softer than expected. But although bonds did, show some gains, yields ticked down, there was a pretty limited impact, partly because they're waiting for CPI, but also because they were looking at some of the underlying PPI drivers, which were signalling that, I won't use the acronym because I think we've had enough alphabet soup, but the Fed's main gauge of inflation, the one that it really watches, those partials feed into that gauge, and they were likely to keep it elevated enough to push the Fed away from considering rate cuts anytime soon, especially, we're all still, under the impact of those extremely strong employment numbers that came out at the start of the year.
And Garth, of course, we continue to watch central bank decisions. I talked about the Bank of Japan sending that signal that potentially rate hikes were on the table for next week. And of course, we're waiting for the BOK tomorrow as well.
Yes, and with both of those, that context of what the Fed is going to be doing, is very important. That helps to make it a little bit harder for the BOK to go ahead with what would otherwise be a very straightforward decision to cut rates. It might mean that they're a little bit less dovish than they would otherwise be in their outlook, because they would be concerned about not letting the won get too weak. We had the National Pension System, I think it was, actually acting to help to support the yen. To some extent, that's part of the Korean authorities being very concerned at how weak the won has become. And as, of course, you mentioned, the chaotic situation politically also hasn't helped on that front. So with all of that going on, I think most traders are expecting the BOK will cut, but the question is, what does it do as far as guidance going forward, and how free it might feel to cut in subsequent meetings. As for the BOJ, they're facing their own difficulties. The yen is so weak, weak enough that it could potentially be a political problem. But meantime, the government has made it pretty clear it's not keen on the BOJ going too hard, too fast. Perhaps the one thing that has helped to push a rate hike back onto the table is that the Fed isn't going to cut. And with the Fed staying like that, that means that unless the BOJ at least talks a hawkish game, even if it ultimately holds, the yen is going to get out of control.
Both Garfield Reynolds here.
Let's take you live now to day 2 of Goldman Sachs' Global Macro Conference, Asia Pacific. It's now getting underway this morning in Hong Kong. Our China correspondent, Min Min Lo, is there with our next guest. Min Min.
Thanks, Heidi. Joining me here to discuss the outlook on U.S. markets is David Kostin, the Chief U.S. Equity Strategist for Goldman Sachs. David, great to have you here.
Nice to be here.
Yeah. So talk to me first about your outlook for U.S. equities, because I understand you're looking at 11% upside for the S&P. What is your best and worst case for corporate earnings this year?
I think the way to think about it, and the conversations we've been having with portfolio managers here at the conference, is the idea of the S&P 500 index rising to around 6,500, which would be around 11% gain from the current level. The way to think about that is earnings per share likely to grow around 11% in calendar 2025 and about 7% in calendar 2026. So equity investors are already thinking about not just the current year, but looking into the next year. Specific to this conference, we've been focusing a lot of questions around the fourth quarter earnings season that is about to kick off today. And so from earnings growth for this quarter, reporting is around 8% gain. And one of the big questions has been, what's the impact of a strong dollar? The strong dollar that really was notable in the fourth quarter would suggest that the magnitude of surprises in the reporting season are likely to be somewhat less than you've seen in the last, say, couple of years. Typically, you get a earnings season where the positive surprises are around 400 basis points. So if that was the case, you'd have earnings growth something closer to 12%. I think that's not likely to be the situation this quarter, probably a little bit less. Some positive surprises, but not so much. So we think about the general trajectory of the U.S. equity market. Earnings are the driver, not multiple expansion. The U.S. stock market trades around 23 times, 22 to 23 times forward earnings. That's a very high multiple historically speaking. So it's really earnings that are going to get us to our target of 6,500.
Okay, so you talk about dollar strength, but we also have very elevated yields right now. Obviously, we're waiting for inflation data. Do you think we're at the peak of yields, and to what extent is that going to be a headwind for equities?
Well, a higher bond yield environment is a concern. It's a concern for a couple of reasons. One, the speed with which bond yields have backed up. Both real and nominal yields have gone up almost 50 basis points in 1 month period, which is a very swift and high magnitude of movement in a short period of time. And historically speaking, that's been a headwind for equities. And in fact, equities in the last month have sold off slightly here in the United States. So the idea of a higher bond yield environment would be a headwind for really strong returns. Our expectation is that inflation is coming down slowly, and that bond yields will fall over the rest of this year, something closer to 4.25% on nominal yields, down from the current level, which is much higher than that. So I'd say that's a big area of focus for fund managers. One of the questions we spent a lot of time with yesterday on the first day of the conference.
But there's also inflationary pressures from possible Trump tariffs, right? And I'm also curious, what do you think is the risk for those mega caps with huge revenue exposures to China, for example, Tesla, Apple? Already we've seen NVIDIA in the crosshairs as well. So
it's a definite question we're receiving here, and not just here among conference attendees in our Hong Kong conference, but also from our colleagues and clients in the United States. So the way to think about it is that it's Trump is somewhat mercurial in terms of the actual tariffs that may or may not be imposed, how much, at what pace those might be implemented. Those are questions that remain to be decided. And so as a portfolio manager, the way we think about it as strategy is thinking about owning U.S. companies whose primary revenues are domestically driven in terms of the United States, and avoiding or selling those companies whose primarily sales are coming out of the country. And the intuition behind that is that companies with high degree of domestic sales won't have the immediate risk of higher retaliatory tariffs. The retaliatory tariffs are likely to be imposed on companies that are more export-oriented. So that's a risk, if you will, to those potential earnings for those companies. So that's the way we think about that. That trade has basically, I think the opportunity still exists to be owning companies that sell domestically and basically selling companies that are more internationally exposed. That's one of the risks around the so-called Magnificent Seven companies. Around 50% of their sales actually take place outside the country, outside the United States. So that's one source of potential risk. Now, we think about these big companies and the source of excess return. There have been fantastic stock performance in calendar 2023 and calendar 2024. Those were associated with premium earnings growth. That premium growth is likely to narrow pretty substantially. There's some numbers around that. If you look at 2024, and of course the fourth quarter results still yet to be reported, but their earnings growth was 30 percentage points greater than the rest of the market. That's likely to narrow to something like 7 percentage points premium in 2025 and 3 percentage points of premium in 2026. So that narrowing premium earnings growth is likely to result in a narrowing excess return. Still outperforming in the coming year, but by a relatively small amount. And that's one of the reasons why, when we think about the best investment trade out there right now, has been focusing on mid-cap stocks. Mid-cap U.S. equities, somewhere between $5 billion and $20 billion U.S. in size. That's an area of the market that has outperformed long-term. They trade at much lower multiples than the rest of the market, probably 16 times forward earnings relative to 22 or 23 times for the large cap stocks. Similar kind of growth rates. That's a much better risk reward in my opinion.
So you favor the mid caps and the next 7 still have some room to run. I'm curious, do you see any interest from U.S. investors to reallocate to China? And if not, what would it take to see more rotation back to China?
We have not seen a lot of interest in terms of my conversations. To be fair, my focus is primarily on the U.S. equity market, but when talking to U.S. companies, U.S. investors, the question is more about, can they get perhaps China access via U.S. equities if they had to do so, as opposed to owning the actual U.S. Chinese companies. That's the questions that I'm receiving.
Okay, thank you so much, David. That was David Kostin, Chief U.S. Strategist at Goldman Sachs. Shery?
Right, our China correspondent Mimi Lo there at the Goldman Sachs Global Macro Conference, Asia Pacific in Hong Kong, and we'll have more conversations coming from that event. The co-head of Greater China Equity Research, Trina Chen, joins the China show exclusively a little later with her outlook for stocks and commodities. We have much more ahead. This is Bloomberg. South Korean investigators have launched a dramatic new bid to arrest impeached President Yoon following a failed attempt earlier this month. Bloomberg's Danny Thomas-Jones is now live from Seoul. Danny, we continue to see these live pictures. People are gathered outside. We see the police out in front. We've heard that police are trying to get through the barricades of the compound there in Hannam-dong. But there's so much conflicting information. I mean, some local media were saying he was arrested, he was not arrested, that they're trying to get him to consider a voluntary appearance for questioning. What are the facts right now?
Hey, Shery. Yes, there's a lot of confusion right now in terms of what exactly is going to happen. I think one thing which is clear this time, the resistance was much less, and the investigators have kind of gotten access to the key area where they want to be. And right now, I think there is a bit of a discussion around how to present Yoon as trying to cut a deal with investigators, which would make it look like a voluntary appearance before CIO and CIO, the investigators. They are trying to push back and say, no, they want to take him into custody. But by the look of it, it's all coming to a head, and we could see in one form or other, Yoon will appear before the investigators, and that is the key outcome. Whether they will succeed in presenting him as a voluntary appearance remains to be seen. But yeah, I think Yoon is definitely will appear in the presence of the agency. Is kind of the big picture here today.
And of course, we continue to see protesters from either side turning out at these attempts as well. With the sort of ongoing uncertainty and chaos, what do we gauge in terms of public support for the situation right now?
So definitely after the second impeachment, there has been a bit of a rallying support coming back to the ruling party. Their support rating has gone up and the opposition has come down. And that's clearly the protest that is out there. A lot of the conservatives out there are trying to come back and support the president. So there is still that aspect of it, but majority still want Yoon to be, removed from the office. But I think these images that are playing out has rallied the conservatives bit around and given a bit of support. But that doesn't mean that people still don't want to continue to see Yoon as the president of the country. That thing is very clear.
Could the situation get more violent from here? Tell us a little bit about the significance of what arresting an incumbent president in South Korea would be as it compares to past instances, right? I mean, this is not the first South Korean president to be impeached.
Yeah, so what is happening today is pretty unprecedented. We've never seen an incumbent president being taken into custody. And I think that's where Yoon and his lawyers are trying to make it play a bit more strategically and trying to say that this is not going to be an arrest, but he's voluntarily appearing. So it has a really historic consequence, and it's unprecedented in terms of what has happened in South Korean politics, and that's what makes it so interesting. And that's where people are trying to get to a stage where they can make it look like a more conciliatory approach to these things. But I think it's past the point, and CIO, after failing in the first effort, are pretty determined, and they would want to go and show it as they have won the day today. Yeah, I mean, that's where things are. But you're right, this never happened, and this will go out in history as a pretty remarkable day in South Korean politics.
Bloomberg News editor Danny Thomas, they are joining us from Seoul as we continue to watch the latest developments around the potential arrest of President Yoon. You can see people still out and about that in the residential compound in Hannam-dong, but you can see also Korean assets, so pointing to the upside. Kospi up 0.8%, a little bit of weakness for the Korean won. Of course, the latest protest, political upheaval, not helped with consumer confidence in South Korea. We are expecting the Bank of Korea to actually cut interest rates again, the third consecutive cut since the BOK pivoted back in October. That could happen tomorrow on Thursday. This is Bloomberg.
The US President-elect Donald Trump says he will create an external revenue service tasked with collecting tariffs on foreign imports. In a post on his Truth Social network, Trump says he will set up the agency as soon as he takes office on January 20th, but provided no further details on how it would work. Analysts and Democrats have pointed out that tariffs are already being collected by the US Customs and Border Protection. Well, governments around the world are preparing for Trump to take office and deliver on the tariffs that he promised. While the threat to China is long-standing, an incoming administration is set to broaden the scope of what is likely to be a complex web of trade alliances and rivalries. Our news desk editor, Jill Daces, joins us now for more. And there's no doubt about it when it comes to the biggest risk to the global economy, the biggest consternation for economists and markets and investors at the moment. It is, what Trump will do versus what he's said that he would do, right? How are we sort of game planning for that?
Well, look, Heidi, I think the big thing to think about with Trump 2.0 here, the second administration, is that his tariff policy this time around seems a lot broader, a lot more radical than it was during his first administration. So you do have him obviously threatening, traditional adversaries like China with additional tariffs. He said, he wants to increase tariffs there from 20% to 60% overall. But you also have seen Trump just within the last couple of months take the fight to allies as well. I mean, think about, just it was about a month or so ago when he was threatening higher tariffs of, somewhere around 25% on places like Canada and Mexico. So what you're seeing with a lot of these governments is their attempts to try to figure out how exactly they protect themselves from these types of increased costs, where they pass those along to, where else they end up sort of negotiating to try to get better deals in place. In Mexico, for example, you've got President Claudia Sheinbaum talking about, sort of ramping up, efforts to combat fentanyl there. That's one thing that, that drug trade is one thing that Trump himself cited as a reason why he wanted to enact more tariffs on Mexico. So you are seeing sort of different approaches here with regard to how a lot of these countries come in and try to deal with this, because, again, I mean, just the scope of tariffs this time around seem to be much broader than they were the first time.
Which is really giving rise to these complex alliances and rivalries. What are we seeing behind the scenes in order to prepare for Trump 2.0?
Right. Well, again, I think that, you look at that Mexico example as one where you've seen some of those efforts to try to figure out, how exactly can they sort of appease Trump. Elsewhere, look at Vietnam, for example. I mean, they've got the fourth largest trading surplus with the United States after, China and Canada and Mexico. They're looking at actually sort of buying additional U.S. goods, trying to see if that's a way to sort of, circumvent this idea that there could be more tariffs. Vietnam has really been in the crosshairs of some within Trump's circles. It was mentioned in this Project 2025 plan that a lot of conservatives have kind of worked with in preparation for another Trump administration. You're also seeing, the EU sit there and kind of talk about ways that they can actually counter U.S. tariffs. The EU is in a really tricky position where, obviously the U.S. as an ally is kind of pressuring them to cut reliance on China, for example. But at the same time, these are really, China in particular is a really strong economic partnership that the EU continues to uphold. And then you've got other countries like Brazil, India kind of figuring out, can we kind of stick this out? Do we really have that much reliance on the U.S.? Or are there different ways that we can use negotiating power to actually, weather the next 4 years or so? But it does, again, just indicate how broad in scope these types of tariffs are. We've heard all kinds of different thoughts about how exactly these could be implemented. And so you just do see a lot of countries kind of, preparing for what could be to come, because at this point, a lot of this is really still up in the air.
Bloomberg News Desk Editor Jill Dace is there taking a look at how we're trading when it comes to LNG and aluminium pricing at the moment. This in reaction to more sort of geopolitical developments. The EU is considering import restrictions on Russian aluminium and phasing out LNG from Russia as part of a new package of increased sanctions. It also includes restrictions on vessels transporting Russian oil, more export controls on military purposed goods, and cutting off more banks from international payment systems as well. We are seeing oil climbing, in particular, 6/10 of 1% higher there on the sanctions angst, as well as some lower stockpiles numbers out of the US also supporting that gain. We have seen oil trading at around that 5-month low, 5-month high, I should say. This is Bloomberg.
Currencies across Asia trading sideways at the moment. You can see the Japanese yen really not doing much, despite the fact that we got comments from the BOJ deputy governor talking about a potential rate hike happening next week, that the board will discuss it, in a comment that really goes far beyond what we heard from Governor Ueda himself. The offshore yuan also not doing much. We had heard from the PBOC as well that they're trying to keep the yuan stable, that they will use tools in order to maintain liquidity and support the currency. Euro-dollar also holding steady at that 103 level. Our next guest says the incoming Trump administration could move to weaken the dollar longer term. Joining us now is Carol Lai, portfolio manager and senior research analyst at Brandywine Global. Carol, great to have you with us. Is this just because some of the long-term goals for President Trump don't necessarily bode well with a strong dollar? Could we see weakness, and when?
Right. I think if you look at positioning itself, it is, signaling that the dollar is very expensive. Last quarter, we also saw the largest increase in the trade-weighted dollar of about 7%, and that has only happened about twice in 30 years. So you can see that the dollar being so expensive and 20% higher than its long-term average. Now, this definitely does not work in favor of what Trump is trying to do. It actually undermines his goal of actually making the US manufacturing industry more internationally competitive. So there are a lot of suspicions that at some point in time, there could be some kind of policy actions, to design, to weaken the dollar at some point. Of course, at this time, all we actually need at this point with such expensive valuations is just some kind of a modest convergence in US growth versus the rest of the world. And that could actually trigger a meaningful US dollar sell-off. The other one that we could think about as well is if Trump's tariffs do not come in as forceful or as impactful, that could also turn the dollar very, very quickly and violently.
Yeah, we heard about the potential of gradual tariffs instead, right? That would be a relief for a lot of Asian currencies, especially the likes of the Korean won that have been battered by domestic politics as well, right? What's been interesting with the Korean won, though, recently, the role that the National Pension Service has been playing because of their hedging strategy needs.
Yes, totally. I think the Korean won has very much kept the downside that we could possibly see for the Korean won, given that now NPS is in the market and they are doing strategic hedging. So, and coupled with the fact that, if political instability is coming down, and we suspect that that is going on, so given all the investigations and the arrests and things like that, then that would lead to that bottoming out in the first innings of actually the Korean won getting better from here. Again, it all comes down to the global view as well. If we get that, paring back a little bit on Trump's tariffs, growth convergence again, China gets just a little bit better, I think we can see the Korean won actually outperforming at some point.
I wanted to talk about the outlook when it comes to the yuan, because supporting the Chinese currency has clearly been a policy priority. What is your outlook? And, given how much it is both a sort of domestic Chinese weakness story, but also largely that outsized dollar strength story.
Yes, I think, if the yuan story is also, very much, like I said, very linked to the global story. It's just that the PBOC has been supporting the RMB massively by this point of time. As you can see, they're fixing versus the spot rate, right? And, a lot of it is due to that widening of rate differentials that's not helping the CNY. Some even say that it could become a carry currency. But, all we need from here is really to see some signs that the Chinese officials are willing to just stimulate the economy a bit more. I think that the market at this point in time is already, quite very much short the CNY as well. So it could all move very violently in one direction if we get, a tipping point in some kind of inflection in some kind of news that comes out that could then support, the RMB, the Korean won, and across a whole slew of currencies out there.
In terms of expectations for the CPI numbers, do you expect that to largely reinforce the market expectations from the Fed that are already pretty set in place? How much uncertainty is there in that outlook, and could we see a turnaround when it comes to the bond market trajectory?
I mean, today's CPI is extremely, extremely important, and that is even more so given that the bond market have been selling off very much so. I mean, yesterday's PPI numbers came out, and it was actually a little bit weaker, but the bond market totally saw through it. It pushed through to higher highs again. But it looks as if that things are getting a little bit exhausted as well. I think, for tonight, if we see a 0.3%, which is, basically what consensus is, which is basically what the number it was in prior prints as well, the bond market may not sell up as much anymore because a lot has already been selling off and been priced in. You really kind of need like more of a blowout kind of number of 0.4% month-on-month. The bond market would then sell off even more. So actually at this point in time, we are reaching a bit more of an asymmetric move where we think that the risk reward could actually tip in favor of the bonds actually rallying a little bit from here, just given the kind of positioning and everyone just in the same boat.
And yet, when you look at rate differentials, it doesn't really matter, the subtleties of those numbers when the rate differential is so big, especially with Japan, right? And the pressure that we're seeing with the Japanese yen. We do have the BOJ decision next week, but even if they hike, which was something that was potentially indicated by the BOJ deputy governor in his speech yesterday, what difference would it make for the weakness of the yen?
Right. I think governors, the deputy governors. Point is very important here because the market has been, I think the market was very disappointed in December that the BOJ did not hike their rates, and so the yen sold off even more. Now, at this point, you are right, though, that the rate differentials does not matter, or it's so wide that, I think one would think that structurally it's on, a depreciation trend. But if the BOJ were to hike rates in January this time round, and if CPI is not blowing out, I think we could easily get a reversal in the yen here for a bit. It may come off and get down below 150, I think, quite easily. The question then is how low does it get to? And that's something that we kind of have to track, and we're tracking that. And then, it may just back up again. It really depends, again, on how exceptional, again, the US data is going to be going forward in the medium term.
Caroline, really great to have you with us, portfolio manager and senior research analyst at Brandywine Global. Let's take a look at some of the corporate stories that we're tracking this hour. And distressed Chinese developer Country Garden suffered another record loss in 2023. It's blaming the result on impairment provisions, declining gross margins and price cuts. Country Garden says it still has more than 3,000 projects to sell, with inventory worth more than $82 billion as of mid-2024. The delayed earnings report comes as it continues a lengthy restructuring process after defaulting in late 2023. Bloomberg's been told that a top BlackRock executive, once seen as a potential successor to CEO Larry Fink, is leaving the firm. Mark Wildman is the head of global client business and a 20-year veteran with the world's largest asset manager. We're told that he is leaving to pursue other opportunities, with BlackRock set to elevate multiple executives as soon as this week in a leadership shuffle. JP Morgan has named Jen Piepzak as its new Chief Operating Officer, taking over from Daniel Pinto, who will retire next year. This is the second time in a year that the biggest US bank has shuffled its top management. Piepzak's spokesperson says she has no eyes on the CEO job for now, saying her preference is a senior operating role supporting the top leadership. Well, the SEC is suing Elon Musk for allegedly waiting to disclose his acquisition of Twitter shares in order to build his position on lower prices. Our Bloomberg News editor Megan Howard joins us now from Washington. So, Megan, what do we know about the details of this complaint, which of course has been sort of playing out in a to and fro for some months?
Hi. So thanks for having me today. We found out today that the SEC has sued Elon Musk in federal court in Washington. The agency is alleging that Musk waited to disclose his acquisition of Twitter shares in order to build his position at lower prices. They are also saying that Musk deliberately ignored a deadline to publicly disclose that he acquired more than a 5% stake in the company early in 2022. And this is actually something that he had previewed in a letter last month. So the agency has officially filed that lawsuit in federal court as of today.
Where are we expecting this to go, especially with an incoming Trump administration, a changing SEC, and of course Elon Musk's influential role in the cabinet?
You know, that is a great question, and definitely one that we will be tracking closely. Musk, who is the world's richest person, has become one of Trump's biggest supporters and closest advisors in recent months. And Trump has even tasked Musk with a broad government cost-cutting initiative for the incoming administration. But, you know, the SEC has been working on this issue for years, and so it's hard to imagine exactly what comes after Trump takes office next week. Trump's pick to head the agency, former SEC Commissioner Paul Atkins, is expected to focus on whittling away at regulations and levying lower penalties for violations. He's a former SEC commissioner, a pretty bread and butter guy when it comes to regulations. So I think that's something that we're going to be tracking very, very closely.
There's also a separate investor litigation on foot as well, right? How do we see this sort of potentially also playing out, and what are the penalties broadly that could be faced by Elon Musk?
Yes, so the agency is claiming that Musk deliberately ignored a deadline to publicly disclose this investment. So right now, Musk's attorney has said that this action is an admission that the SEC cannot bring an actual case because Musk has done nothing wrong, and everyone sees this for a, quote, sham. So they're going to be fighting this pretty closely, and it remains to be seen exactly how this shakes out.
Bloomberg News editor Megan Howard there. We have more ahead on the Asia trade. This is Bloomberg.
Take a look at broad Asian markets. We're a couple of hours that have just started trading with some of these major markets. For Australia, we are seeing, if you can call it leadership there, about 0.4% higher there. We did have a note out when it comes to managing expectations for the upcoming earnings season this year. Citi sees muted earnings growth in Australia, in particular downside for some of the big miners. We're seeing the Kospi holding its sort of head above water, up by 0.5% despite the ongoing political confusion as we continue to see that saga play out. Latest reporting from Yoon saying that the Chief Investigator's Office aiming to arrest President Yoon, not considering a voluntary appearance. But of course, there's been a lot of conflicting reports in this second move to try and arrest him and execute that arrest warrant. We continue to watch Korea very closely ahead of the BOK as well. That downside when it comes to deterioration in the labour market that we saw earlier this morning with the jobs numbers on top of some of these other weakening economic indicators suggesting that we're going to see a further cut from the BOK tomorrow. The Nikkei 225 is up by just about 0.1% there. We do have kind of a tepid US session coming off the back of that there. Traders globally really awaiting the US CPI numbers. It could sort of further consolidate the picture of a more reserved Fed in terms of how much easing they can do. A lot of consternation, Shery, of course, when it comes to Trump tariffs, and really that impacts a lot of sectors, including autos around the world.
Yeah, we continue to watch Toyota very closely. In today's session, we're seeing the first gain in about 3 days. Toyota's focus on hybrids and gas guzzlers, making the Japanese company the world's #1 automaker. But the success also raises the risk of Toyota being left behind as EVs become more popular with customers. Bloomberg senior editor Reed Stevenson joins us now. So, Reed, how is Toyota competing in the EV space?
I mean, right now, they're still sort of in an early phase. You have to remember that, they are the world's largest car maker with more than 11 million vehicles that they produce every year. And so they have to serve many markets from Africa, the Middle East, to North America, Europe. And so essentially what they've embraced is what Chairman Akio Toyoda calls the multi-pathway strategy. So that's gasoline engines, hybrids, and EVs. And based on that, the EV numbers are still quite small when, for example, you start looking at Tesla and BYD, et cetera. And to a certain extent, this is a strategy issue. But, our story also kind of looks at some of the decisions that are made in the actual manufacturing of Toyota's EVs. So we went to a teardown facility, looked at some of the components, and, made note of some things that really Toyota could learn from upstarts like BYD and Tesla.
In terms of producing these parts, more low cost, in terms of producing more of those things in-house?
Both, actually. So weight reduction is a key issue when it comes to building EVs, ease of installation, low cost, etc. I mean, none of this is actually new to Toyota. They have perfected, the art of manufacturing through their well-known Kaizen process and the Toyota production system. Essentially, the question is whether, this way of thinking is both a help or a hindrance to the transition to the EV era. And, there's no real conclusion. There are going to be challenges. But I think the overall lesson is that, with a willingness to learn and embrace some new ideas, possibly some radical new ideas, they've got more than a fair fighting chance.
When it comes to Toyota and broader Japan autos, how much concern is there in terms of impact from potential broadening of trade tariffs from an incoming Trump administration?
Well, to a certain extent, a lot of automobile makers, Japanese automakers, have plants in the U.S. and they serve the U.S. market through those factories. And so that's probably not going to be as big of an issue going forward. Now, the issue of tariffs might affect EVs a lot more because a lot of them are not produced locally. But again, the volumes are pretty small, so I'm not sure that's really going to hit the company that hard, at least going forward in the near term.
Reed Stevenson, Bloomberg senior editor, here with us in the Tokyo studio. You can actually read his story on the terminal for terminal subscribers. It will also be published later today on Bloomberg.com. Staying in the EV space, Volkswagen actually reporting a decline in deliveries last year because of weak demand for its EVs and the intense competition in its key Chinese market. The company delivered around 9 million vehicles globally, 2.3% fewer than in 2023. Sales of its fully electric vehicles also declined in both Europe and the U.S., along with competition from Chinese manufacturers. VW has also been hit by reduced EV subsidies across Europe. We have more ahead. This is Bloomberg.
Some of the stories that we're following this hour: Israel and Hamas have reportedly agreed in principle to a draft ceasefire. CBS News cites Arab, US and Israeli officials saying the deal could be finalized as soon as this week. Both President Biden and President-elect Donald Trump earlier said they were optimistic a truce was close. Israeli officials say the first phase would include a 42-day ceasefire, the release of some Israeli hostages and Palestinian prisoners, and a buffer zone in the Gaza Strip. The Biden administration is rolling out new measures targeted at China to support US auto manufacturing and AI development. A new rule effectively bans personal smart cars from China and Russia. US officials also want to expand those restrictions to buses and trucks. The administration also unveiled an executive order on AI, allowing companies to build massive data centers on federal land. A European Union inquiry has concluded that China discriminates against foreign firms in the procurement of medical devices. The 9-month-long investigation found that Beijing has been favouring domestic companies through a complex network of laws and practices. The EU is now considering possible countermeasures, including limiting China's access to public tenders in Europe. Southern California residents exhausted by a week of wildfires, evacuations and blackouts are facing another night of critical fire danger. Returning Santa Ana winds are threatening to fan the flames, with more than 10 million people facing what officials call a particularly dangerous situation. Estimates of the insurance bill keep rising in the meantime, with Keefe, Bruyette and Woods now seeing losses as high as $40 billion, which is double their figure from just a day earlier. Shery.
Haidi, the EU's climate chief, says Europe too must prepare for more intense wildfires. Vovka Hoekstra told us exclusively that the recent string of natural disasters around the world should create more urgency for climate action.
In my view, what is truly at the heart of the matter of what Europe needs to do, what I need to do, is make sure that we, on the one hand, continue full-fledged with climate action, simply because science is crystal clear that we'll see more rather than fewer disasters. But we marry that, we bridge that much more effectively with the realm of business and competitiveness, and with a fair and just transition for our people. That is in essence what this Commission and what I need to do in the next 5 years.
And I'd like to get into those, but I think specifically I'd like to just talk quickly about the wildfires in California, because there is a sort of preventing the CO2 from getting into the atmosphere side of your job. Then there is the dealing with the crisis once it is unleashed. Well, how do you sort of think about that problem here in Europe and sort of preventing what we have in California, where they were clearly very ill prepared to deal with what is an immense crisis?
what we see, and we've all seen the truly devastating news from the US. Absolutely horrible to see what it does to the people over there. But unfortunately, of course, we have seen a range of these type of events also on European soil. Wildfires, floodings, droughts, with huge effect. And the reality is that given that temperatures are on the rise, we will see more rather than fewer of these events going forward, affecting human lives, affecting our economies, affecting even the domain of geopolitics and safety and security. So you're absolutely right. On the one hand, we need to continue with all our efforts towards what we call mitigation, basically driving down emissions. But that alone, unfortunately, no longer is good enough. We also need preparedness. We need adaptation so that when disaster hits, whether that is a potential flood, whether that is drought, we become far more effective in making sure we manage it as well as we can.
That was the EU Commissioner for Climate, Net Zero and Clean Growth there, speaking exclusively to Bloomberg. And of course, we are watching ahead of that US CPI report, and there seems to be some pretty heavy wagers when it comes to traders putting in these bets that US yields will fall on potentially softer data. The cost of call options for Treasury surging ahead of that key CPI report. Services inflation remains a big focus as well, to see how that data plays out when the release comes out. But forecasters looking at that CPI index to show a 0.4% advance in December. Core seen at 0.3% rise there. But broadly, it's such a critical time for investor expectations in terms of looking for signs of inflation amidst really diminishing expectations of Fed easing. That is it for the Asia trade. The China show is next.